Hey everybody, it's Swaminathan. It is Thursday, Jan 29th. I'm looking at Alibaba. Alibaba, if you are following the stock, reported earnings today morning, and it's taken a beating. It's down 10%. Now, Alibaba did report a 40% jump in their revenues. However, it fell short of what the expectation was. So always when it comes to earnings, it's not what they report, it's what the market expected. And I guess they were expecting a bigger number than 41 cents, than 40%. And so it's down. So you can see today, if you look at Alibaba, the low is 87.36. So now, if you know that number, that is exactly where Alibaba IPO'd. So if you look at Alibaba and strictly look at it from a 6-month chart, I believe, yep, it IPO'd somewhere here, and it on the first day it IPO'd at about 88, and so it came down, and and since then it's gone below that, of course, but you'll see that it didn't go too much below. So people have gotten into Alibaba. So if you look at the volume over here on the IPO day, that's 200 million shares, and of course that is the highest volume there is. And then of course people are selling Alibaba right now, but it's finding support there. So I feel Alibaba will not go too much down. So what I have here is a credit spread. It's a bull put, and it's 84.80. Unfortunately, there's no other what do you call strikes between 84 and 80. This is the Feb series, 22 days to go, getting about 57 cents credit. And if you look at the risk profile, so it's about 570 on a risk of about 3,400. So not quite 20%, maybe 18% or so. Not too bad, but of course it's a credit spread, and if it starts going down, then you would have to adjust these credit spreads. And if you're unsure how to adjust credit spreads and things like that, then you should look up the Adjust Max product on Option Tiger. So on Option Tiger, if you come to the proprietary systems, you will see the Adjust Max class. So in the Adjust Max, you'll learn completely about how to adjust all kinds of options. But of course, we look at credit spreads in a very big way. Now, why it's important is because in a credit spread, always you're going to have more risk than reward, but then you also have probability on your side. So you can see that the break even is almost at 83. So which means as long as Alibaba doesn't fall below 83, we should be able to make some, close to max profit on this trade over the next 22 days. So again, about 17-18% in the next 22 days on Alibaba, and primarily because it found support at its IPO price. So whenever you look at the IPO price, always you're going to see some good support at the IPO price, because a lot of people have gotten in there and they don't want to see the stock go below the IPO price. And if it does, then people will start buying into it again and providing that support. And looks like that's what's happening for today. We'd want to wait for another day or so to see if the downward pressure is over, and then get into this credit spread. So that's the trade idea for perhaps tomorrow or Monday. Thanks.